This is Christopher Lewis from the dailyforex.com trading desk, taking a look at the March 6th Forex session. In front of you is the Kiwi dollar pair, and this is a video that will, at least in my mind, show one of the greatest traders in all of history. Jesse Livermore once said that we are paid to wait sometimes. Quite frankly, I think that's what's going on in this pair currently. When you look at the chart, you can see that I have a yellow box here, and this was the recent consolidation. This is a rough idea, which I basically had it at 84.50 and a bottom at 82.50. When I look at the charts, I can find all kinds of different things to do possibly. And one of the things that a lot of traders will do is they'll throw up a Fibonacci retracement level. And it makes sense that the 23.6 has, at least for a while, held as support, but it's not a major Fibonacci level, so a lot of Fibonacci traders wouldn't necessarily be looking at it as the be-all end-all of support. However, as you look at this chart, you can see that 80, and I have marked 80 for a reason. It's on the longer term charts, it is a significant area of reaction. You can see that the 50% retrace is just below it, which is a reasonable place to expect some type of reaction. And now we have two good reasons. The 38 is at the 81 handle, and of course you have a hammer at the 82. So I'm already building a case as to why, even though we broke down, I may be a little leery of selling this pair. With the most recent run up, obviously the trend is very positive at this point in time, and this is where you have to make your decision. Given enough time in the markets, hopefully you can be patient. But there are going to be traders out there who want to jump on the short side of this trade, which is it's very rare that traders pick the top of a market. And the reality is most of the traders who do try to tend to be a little less experienced, and what they will find is even if you would have shorted, say, this candle here, and you're starting to break down and everything looks great, and let's even take into account that possibly this was a meltdown, say we get to 50 for whatever reason, very few of those same traders would be willing to actually hang on to the massive swings you would be looking at in a counter trend move like that. So to save all of the drama and the hassle, the more experienced trader will just simply wait most of the time and take it from there. There are some counter trend traders out there that are very good, but as a general rule, it is much easier to go with the trend. So now that we have that out of the way, and we have this area here, we have the 82 level, which is basically right where we're sitting, 82.50 to 82, which could be supportive. So that makes me leery of shorting here. But once we short below there, 81 has a hammer there, a shooting star, a hammer, and of course the 38.2. So that's a reason to think that if we do break down a little bit, you have to be out by 81. And then of course there's the 80 and the 50. And then of course the hammer just below the 50. Shooting stars and hammers there, those normally signify some type of support and resistance cluster. So looking at this, as we break down, you could run into some trouble at 81. You more than likely will run into trouble at 80. If we blow through 80 like it's not there, then something's changed drastically in the markets. So looking at this to me looks more like a setup where we are willing to buy the Kiwi on the cheap. My job now as a trader is simple. I just simply have my spots marked out ahead of time, and I look for some type of reaction. Perhaps we fall down to 81 and we form something along the lines of a hammer and then start to rise again. Well, I see that there is a little bit of resistance there, but it is with the trend, so you have the weight of the market, which is completely opposite of trying to go counter trend. You're trying to bust all of these traders back down out of the market. The truth is the Kiwi's strong for a reason. Central banks have very easy monetary policies right now, and as such, people want to get rid of fiat currencies and they want to buy stuff like wheat, stuff like oil, stuff like gold. New Zealand is a net exporter of stuff. Most of it's agricultural, but it is commodity related as well, or in general. And in fact, the Kiwi is a good barometer of commodity markets on the whole. not necessarily any one specific market, although they are pretty big with milk and cattle. Those are very liquid futures markets, anyways. So, having said that, as long as we are in an easy monetary situation, the Kiwi should continue to gain from that, as well as all the other commodity dollars. So, with all of this thesis being put together, I just simply wait to see which one of my potential levels offers me the supportive candle and the bounce that I'm looking for. I go long, and then I can aim to continue the trend.